With that, ladies and gentlemen, we move on to the final session of this conclave, which is a panel discussion titled Wave of the Future, Next Gen Business Solutions for SMEs. And I'd first like to welcome and introduce the members of this panel. Anurag Agarwal, partner, the Avishkar Group. Anurag Avula, Chief Executive Officer, Shopmatic Group. Manish Bhatia, President of Technology, Analytics and Capabilities, Lending Cart. Meenakshi Indra, President, Enterprise, Upgrad. Kapil Dev Iyer, Vice President, Demand Generation and Marketing, Tata Tele Business Services. And Saurav Gupta, Bella Casa Fashion and Retail Limited. This session will be moderated by Faiz Askari, Editor and CEO, SME Street. Ladies and gentlemen, if you have any questions for the panel, please click on the Ask a Question button and kindly put your question in the question box. Time permitting, we will definitely take a few questions. Do stay tuned in, ladies and gentlemen. We will be back on the other side with the panel discussion.
So a very warm welcome to everybody, every distinguished panelist in this. Mr. Anurag Agarwal, partner of Avishkar Group. Mr. Anurag Avula, CEO of Shopmatic. Mr. Kapil Dev Iyer, whom we have just heard in brief, although we came late, so it was the presentation was getting concluded, but it was something really valuable. I'm sure we'll be having more insightful from him. Mr. Manish Bhatia is the President of Technology, Analytics and Capabilities at Lending Cart. And Meenakshi Indra, President of Upgrad. Mr. Saurav Gupta, Bella Casa Fashion Retail. And myself, Faiz. I am the founder and editor of SME Street, also SME Street Foundation. We work with the SME and MSME segment. And it's really my pleasure, and I'm excited to be part of this, panel discussion, especially with people from Lending Cart and Upgrad, and especially the cutting-edge retail segment, are part of this. So that adds to the, to the whole value of this whole conversation which we are going to have, and to set the tone of this, panel discussion, I would be focused around, and we all would be focused around two things. One is obviously how the SMEs are, because, the whole 10 months, last 9 to 10 months, we have seen a very challenging and very tough time, which we will not going to, discuss because everybody are part of that. But moving forward, how future ready we are going to be, how future ready SMEs are going to be, depends on their technology appetite, and it depends upon how technology is getting, used at their level. So, and obviously the kind of transformation we have seen in last few years, last few months, are like, in the education domain or in the retail, when we say, touchless or contactless, retail. And there are so many, apart from the digital, transactions. So there are huge level of, disruption or the change or the transformation, I must say. But everything is now getting consolidated, is my personal view. Everything is now getting streamlined, and obviously the technology uses maturity is going to decide that. And we have technologists with us, and without much delay, I would definitely like to put this conversational point to the distinguished panelist about how how the SME sector should probably look at getting into the future ready mode, especially with the perspective when we have seen a lot of forced technology adoption in last few months. And with the forced technology adoption, I must say, I'm talking about things which are which SMEs or education institutes or small retailers have to adopt without much of preparedness. Like, we have seen work from home, we have seen education getting delivered at home, we have also seen local kirana store is accepting the digital payments through links. So they are consolidating various tools, of available tools to them. So having said that, what exactly is the future roadmap? I would like to hear from Mr. Abullah or Mr. Iyer, if you can just give us some light. We are going to have inputs on education from Meenakshi, and definitely lending card. We will have a lot of insightful. I have few points for him as well.
Thanks, thanks, Faiz. I'll just start. I'll take maybe a minute, and then the other panelists can come in. I think one part which I touched upon in my presentation is the fact that how cloud as a technology can help people continue their business anytime, anywhere. And we've come up with a cloud communication suite, and I will start with an example. I think that makes it very clear in people's mind. Here was a collection agency. Collection agencies normally are 7,500 member setup, and their whole bread and butter was their field force going and knocking at the doors of each of the customers, doing their telecalling. And how collection agencies work. It's the command and control. There has to be some team leader who's then chasing, saying that what is the collection that you did today from hard bucket, soft bucket, so on and so forth. Now, these guys came back and said that, now my collection agents, all my forces have migrated. Some of them were from Bihar, some of them are from other states. They've all migrated, and I'm not able to recruit new set of guys because the skill set of collection is very different. So what do? I want an ability or technology which allows my people from their comfort of home to continue the collection calling, but at the same time, I want the command and control. I want to see which agent is doing what. I want to know whether, this agent has been able to get this much collection or not. So they wanted a good mix of command and control and an ability of their distributed workforce to, continue their operations as is where is. And that's where our cloud communication suite came in, wherein, at a per agent level license, we gave them a solution. This is about 1,500 rupees per agent. And I'm just trying to give a construct of how easy from a cost perspective it is. And with that, what happens is this particular collection agency can technically do exactly what they were doing in the pre-COVID scenario in terms of which all customers to be called, centrally put it from their home, then it goes back and gets distributed through the technology to the relevant agents. The agents conduct the calling, and the team leader from his or her home is checking every hour in terms of what has happened, and then pushing the pedal in terms of calling up those guys to say, hey, you've not done great, what is happening? So what this technology of cloud communication has done is allowed you to monitor, analyze, everything that you're doing from your physical premise, and also I would say get that sense of command and control which was missing when people were not there physically together. At the same time, allow your operations to continue where your resources were distributed or working out of their home. So technology like the cloud communication, and this is just one use case of a collection agency which came to us. There are other use cases of BPOs coming to us, but all of these in a service kind of a setup where you have a lot of people who are dealing with one to many in terms of multiple customers or multiple stakeholders. This whole cloud communication suite allowed them to do all of it. And as I said, there's no physical investment, zero capex. That's just an opex of about 1,700 rupees per agent, and things start get going. And how much time does it take to install and get the setup up? Less than 3 days from the time they say, okay, I want to go with it. That's the power of technology, and the use cases are just multiplying. We also have a use case wherein there is a food delivery chain which said that I don't want any contact to happen between my food delivery person as well as the customer. Erstwhile, there used to be signing, there used to be a contact which used to happen. So they wanted a system wherein when the delivery boy is going and putting the stuff in front of the house, there has to be a OTP which gets triggered to the customer. Customer confirms on that OTP, and the delivery then gets concluded. Both the parties are matched instead of having any contact that used to happen. All of this again has happened over our cloud communication platform, one other solution suite which allows that to do. So in my mind, I think what technology is doing, and it's a very I would say, exciting place to be, because all the pain points, which I think solutions were available, but people were not really looking at those solutions as a primary objective or primary solution, have now started looking at it, and that has also triggered multiple new use cases to come in. So I would say India anyway is known to come up with innovative solutions every time there is an adversity. I think fortunately, because of the government push over the last 3-4 years, technology has been an imperative. We are now finding better use cases for the technology which was already there. So I think India is on a innovation curve. And Mr. K.V. Kamath in one of his interviews said that, India is now in a digital super cycle mode. And I completely agree that, the use cases are just multiplying. So exciting times, multiple technologies available.
So yes, very rightly pointed out, technologically we are ready and we have all the, necessary technology tools available. But my question would be for Mr. Avula, who probably can give us his experience of being into the retail platform. When we actually have to adopt any new technology, there are lot of issues with regards to onboarding of such technology. There are issues primarily dealing with non-technology peoples. So you may train your sales force, you may train your delivery boys, but what about the customers? How is the customers actually reacting and utilizing the best best form of your deployed technology? Can we have some inputs from you, Mr. Avula?
Sure. Thanks, Fayaz. And I think your introduction to the whole segment was also quite fabulous. It kind of laid down the context of the current challenges that are facing SMEs quite well. And I think in relation to that, I think what we do at Shopmatic, just to sort of give you a context and hence the experience becomes more relevant, is that we enable small businesses to go digital, right from Kirana stores to individual entrepreneurs to SMEs. And I think one of the big learnings for us is obviously during this time, it's not an option. Going digital is not an option, but an imperative. And I think that sort of has been evidenced by the multiple stories, the case studies that Kapil has laid out quite succinctly to that extent. So what we've done is obviously, and also the fact about innovation that Kapil spoke about and you touched upon, is that during this time, innovation is key. And how do you innovate during this time? For instance, do we have Kirana special products that could help merchants become successful? But I think one of the big pieces is for us to help merchants who are our customers or their customers adopt technologies that are not behavioral changing to them in the current context of things. So let me explain what we're trying to do. So if a buyer today or a consumer is engaging on chat, you need to have a solution that allows the merchant to be able to share their products and their catalog on chat so that the buyers can consume it. So it's not just about building a technology that is something which is quite complex and for people to adopt and onboard, but make it as part of their daily life in terms of how they use it. So mobile first, every single corner of India needs to be is accessible by virtue of the smartphone penetration. How do you make that available to the merchants to make that particular case study happen? We have case studies of a particular merchant or a young student, actually an MBBS student from Basti, who during COVID time set up an online grocery store and started supporting that, and he got featured in the Forbes magazine as well. So stories of that sort abound quite significantly. But the idea from my perspective is that technology needs to be consumed in a manner that is easy for the consumer. And in this sense, the consumer could be the end customer, could be the merchant in this context. And how do you enable and how do you continue to innovate on that is something that we've done. For instance, we've reduced the barrier to entry. You come in and you pay us only 3% on the transaction and 50 rupees per month to use the platform. So completely removing the barriers to entry for adoption. And again, making it easier for the merchants to then, or the customers to use the product and then share their pieces on that. So it's been growing, and it's also evidenced by the growth that businesses such as ours have seen in the market as well.
Mm-hmm. Wonderful. And the second aspect, which is very critical and which has been very much decisive for any business, is the lending part. So we have Mr. Anurag and Mr. Manish Bhatia. I would just like to hear from you the perspective of COVID era and the lending process, because a lot of documentation has been, moved to digital stream. Even the government schemes, or even the, PSU banks have started lending money. Their lending process have added more elements of digital. And being a digital platform since beginning, I would definitely like to hear from Manish Bhatia about lending cards, model, and how you evolved to the next level in these few months, and what is, and definitely Mr. Anurag can give us an idea about the VC funding for the SME sector, from the kind of aggregated funding which requires a kind of mix from the NBFC as well as from the banks, ensuring the loan or the financial support to be delivered to the entrepreneur. I would like to hear from both of you, and I would request that if we can maintain the time element also in our response, so it will be better.
Sure. So I'll give you a quick response here. So one is, yes, every large event only happens once in a business, right? And this is one of those. So, it's like the Black Swan event, where it's also a huge opportunity for people to sort of get back to first principles. All businesses figure out, okay, what really they stand for. And, thinking about technology as an additional thing versus a technology that's overall enabling your business is a completely different mindset that this pandemic has forced everyone to do. LendingCard has always been basically born in the cloud, and we've been able to sort of lend to more than 1,300 cities all across India without having any physical presence. So, but I think this event has overall forced us to think about anything that we were doing manually. How do we sort of go into digital? So right from origination to lead generation, figuring out, how do you do KYCs, to e-sign, we've got the complete suite of things where customers could come in and actually get a loan in their bank within a day. So that's the overall power of technology, and also sort of gives us an opportunity to be a part of what we call, the future of where we want to be at $6 billion economy. It's always a positive sum game, right? It's not a zero sum game. It's a positive sum game. So how do we be, a bigger part in SME growth, where, they are able to do their businesses well, and financially we are able to sort of support that. So technology sort of is able to sort of be a huge part. Even our, the loan origination and the scoring, we have an IP base where instead of just looking at the credit scores, we actually look at the cash flow scores, right? And that is more, instead of having a backward view of what the score would be, we actually have a very real-time view of, how a customer is doing, how the business is doing. So we are able to score the business in real time and figure out whether it's a credit-worthy customer. So those are the things we're using to actually take to the next level.
So are you relying on some, credit rating agencies, or you have your own analytics or, understanding of defining the creditworthiness?
So we absolutely use credit rating agencies as an additional data point, but heavily, 75% of our decisioning is based on, the bank statements of a business, where we overall decipher the entire P&L, how the customer, how's the MSE been, how credit savvy the person is, how digitally savvy the person is, and we actually use additional data points to figure out whether this is a business that we would sort of back or not. So definitely, a big part of what we do.
Okay, wonderful. So in a quick response, if we can hear from Mr. Anurag, and then we'll go to Ms. Vinakshi about the education technology which has transformed. So Mr. Anurag, if you can let us know about what Mr. Bhatia has added is the micro loan, or the loans which are actually used by the individuals, or also which is being used in a really a widespread and a quick manner through LendingCard. But how about the SMEs for their business loans? How about getting money for their business expansion, which actually is considered to be a lengthy subject when it comes to process? So over to you.
Yeah, thanks, Faiz. So let me just also clarify what we do. So at Avishkar Group, we basically are a platform which is focused on businesses that are catering to low-income population. And through business, we are both trying to make a financial return and also create impact on the ground. So we have 4 operating businesses that we run. One is a venture capital arm. So we actually provide equity to early and growth stage companies. We've invested in about 70 odd companies so far across various sectors. Core sectors are financial inclusion, sustainable agriculture, and then we do a whole host of services including waste, water, sanitation. So anything which is impacting people on the ground. So here we make select few investments. These are more evolved entrepreneurs. We don't mind going in very early. So a lot of the companies that we invested in have been at 0 stage or very early on. But our ratio of investments to pipeline is very low. We end up investing in less than 0.1% of the companies that we look at. So we are very, very selective there.
Okay.
But in addition to the venture capital business, we also have 2 NBFCs that we run.
Okay.
One is a microfinance company. It's called Arohan. We currently have about 2.3 million customers there. So there we lend to people which are even smaller and earlier stage, what a typical lending card would lend to. Okay. And a very large number of customers. We have about 6,500 people, 700 branches. But there is a huge role of technology there in terms of reaching out to these people, in terms of monitoring, in terms of credit scoring, etc., and collection activity. So very, very digitally enabled there, but there is a big physical element as well.
Okay.
In addition to the microfinance entity, we have another NBFC which is called Ashv, which is focused on the MSME and SME sector. And there we do a business in some senses similar to lending card, where we again using technology both for sourcing as well as credit scoring. So there we've put in a lot of emphasis on data analytics, similar in some sense to what Manish was describing. So I won't get too much into that. That obviously tech has a huge role to play. While obviously you need to enable your business and adapt to changing circumstances. So earlier there was a lot of physical interaction as you're going higher in ticket sizes with the SMEs. But given the current pandemic, our own internal systems and processes have changed quite dramatically in terms of dealing with it. Even in some of our portfolio companies, like for example, we have a company which was into early schooling, right? Physical preschools, a chain of preschools. Now, obviously, that business got completely disrupted because of the pandemic. So again, how do you transition from being physical to online, develop processes, develop methodology, sourcing people, giving them comfort. So I'm sure Meenakshi will have probably a lot more to add on that front.
Yeah.
But it's been interesting in terms of how businesses transform. By and large, what we've seen is that because we've been focused on what got classified as essential services, most of the companies that we invested in have been reasonably resilient and have actually come out stronger during this period. Actually, almost pretty much all our portfolios actually now better off than what they were during pre-COVID times. So it's been fairly good response from the company side. There's been certainly some tightening of the belt. There's been certainly some changes in the business model and the way we deal with our customers. More technology enablement for sure. But very, very high focus on bottom lines in these times.
No, absolutely. In fact, one quick milestone I must say that I must share at this forum where we have every profile of people like lending as well as retail as well as the technology enabler. So this Diwali seems to be a wonderful milestone for Indian MSMEs, especially with regards to coming back on track from the pandemic lockdown days. So this Diwali seems to have brought us some level of positive growth and positive energy, although. And with this, I would definitely like to hear from Meenakshi from a perspective which has actually transformed every household of the country. So when I talk about every household, so education is one of the integral part of our society now, and we can proudly say that yes, education is happening at almost every household in the city and in the top 20 or 50 cities in India, and we have seen a huge transformation in this space. At the same time, when we actually have education technologies, we are also moving towards streamlining certain things. So when lockdown happened, students have gone for a kind of, the start was so happy, but then the schools started sending notices that, okay, we will be starting. And then the start was through, the ad hoc arrangement normally, and Zoom or, some of the other platforms have been, utilized for that. But having said that, there are few companies, few startups in India who have always been working on education technologies, and Upgrad is obviously one of them. And since you have already set tone, you have already set example how education can utilize technology. What is your opinion on the future ahead? Future of technology-led education ahead. I definitely would like to hear from you, and thank you so much for being a patient listener to this whole, panel.
Well, thanks for that, Faiz. It was a very insightful hearing into Kapil, Manish, Anurag Agarwal, and Amul, and of course the context that you shared. A very warm welcome to all our audience as well. Of course, I'm representing Upgrad here, the EdTech player for large companies and our learners in the retail space as well. What I definitely want to share with you as I talk about the role that technology, and especially EdTech, can play for our SMB colleagues, especially in the retail or e-commerce space. I came across this data point about a month back. So in India, if you look at in the current COVID time as well, we have about $8.7 billion worth of market potential in the SMB space. And if you look at retail stroke e-commerce, that comprises about 22% of it. That's a massive $2 billion, which means there is a market opportunity. We have buyers wanting to sell, we have sellers wanting to buy, and that's the conduit or the role that we can play together on how to build this together. And all the conversations that I've heard from my co-panelists actually allude to that. When we talk about what's the need of our e-commerce companies or players in the SMB space as well, over the last 8 to 10 months, we've been in conversation with quite a few of them in terms of enabling either their digital footprint or to help build a competitive advantage for them. The lack of technical skills and expertise is something that's coming up over and over again as they look at going deeper into, let's say, tier 1, tier 2, tier 3 city, or even putting their solutions and their offerings to the retail buyer or to the retail consumer. What we've also realized is that the one aspect that's unfortunately overlooked by our SMB sellers is that of brand building. Contrary to popular belief, the role is not done when the first sale is done, especially in an online space. What's really imperative is for the customer or the consumer of that service to understand that brand. There needs to be a lot of consumer loyalty that builds in, and whether we like it or not, putting our brand top of mind or to have a recall for that, unfortunately, is hypercritical. It leads to not just customer acquisition, but customer retention. In an online space, we realize that the cost of retaining a customer is a lot more economical than pure play acquisition. And that's actually one of the business challenges, along with the competitive advantage that we've been working with our companies. I do want to reference here the buyer behavior in this context. I'm sure that will be very interesting for our audience who is in the e-commerce space. The market model or the sales model of awareness, interest, desire, and action is hyper prevalent here. As marketeers or as e-commerce companies, it's not just about making our brand known. It's also about having a continuous interest and engagement. There needs to be a continuous desire with our consumer to say, hey, this is something that I need, and which ultimately leads to the sale or the proof point of an action. At Upgrad, what we've been doing with our retail players and in the larger segment, and as you spoke rightly, we have actually two elements in terms of an individual learner who might be either a student or an employee of any of your organizations that becomes actually a retail learner for us. And we actually partner with large companies, medium-tier companies, startups, conglomerates, even entrepreneurs in terms of how do we build those resilience and those edtech platforms for them. And in that context, we've actually been pivoting on three key parameters as a business outcome for them. The first one, of course, is business profitability. The second one is process optimization. And the third one is employee productivity. whether you have a 3-member workforce or a 10-member workforce, is hypercritical that each employee is able to deliver a lot more for our organization. We've had great interaction and good feedback from them, from our e-commerce partners, and how by upskilling their teams and resources, they've been able to get either a better process for their organization or more profitable outcomes or enhanced employee engagement. As a quick sum up, guys, I'll try to talk about the key 3 themes for our e-commerce colleagues who might be listening into us. The first one definitely is attention to digital campaigns and analytics. Hypercritical to understand what's working, what's not working, what's the kind of your programs or products that are getting a good volume, the ones that are not getting volume, and what's the reason for that. We can definitely partner with you on that. We have created a digital marketing program specifically for e-commerce or SMB players. We have partnered with MICA, which is the best educational institute in India, and happy to pass on those efficiencies, short-term, long-term, as the needs might be. The other one that we've realized is that of scale, especially in e-commerce. How do we enhance the speed of delivery and how do we reduce the cost? We actually lean into cloud computing in a big way, especially for e-commerce, because it helps keep your data secure, makes it accessible. A lot of successes actually are coming in from a cloud computing perspective. The last one I'll talk about is leaning in heavily into artificial intelligence. It can be as small or as big as you want it, provided you have that touch point. It helps process and predictive efficiency, especially for retail companies. We've spoken a lot about payments and the flexibility of it. So the focus clearly is delivering business outcomes and mapping what our consumers need to our retail companies. And that's it from me, guys.
Hey, thank you so much. In fact, that's short, crisp, and very articulated. And the point which I don't know whether how much time do we have? Do we have some time? We can take a couple of more points. So we will quickly touch upon the lending aspect or the finance aspect or in the retail. When we talk about MSMEs and when we talk about I would just like to quote a recent research report which we have conducted, which we have published on SME Street. We published a data collecting with our own first party data, which we reached out to MSMEs, and we found some of the challenges that they face for in their bid to expand their business. Either this expansion could be their business expansion, or it could be expansion of adopting any kind of technology, or just increasing the coverage of their respective business. So we reached out to some MSMEs, and we found that 34% of them have suggested that finance and MSME finance is one of the biggest roadblock for them to take this decision, and that's why they would prefer to remain happy in where they are. That is one. Second data point from an international forum I have got, which says that in developing countries, close to about 41%, which is 1.3 billion MSMEs in developing countries, are financially crunched. So they require certain MSME finance or SME finance, but they don't get it, or they are under-financed, to be precise. And this global figure is much bigger than that, and especially with regards to developing countries. So these SMEs holds one of the most important aspect of economic growth for the developing countries. That's basically, and that's how we can calculate that how this gap, this MSME financial gap, MSME finance gap is affecting the respective economies of these developing countries. So with this point, can I have inputs from Manish or inputs from any of other our distinguished panelists? Even Meenakshi can also talk about how entrepreneurs themselves are finding it challenging or to invest on themselves, because getting a degree or a certification for themselves from upgrad or from any other education tech platform definitely going to add value to their business. as well as, what about if my, if my workforce, if my top management is better qualified, so all of these, decision making holds, a lot of relevance. At the same time, finance becomes a challenge. So can we have some inputs from, any of you on this?
I think there is. Okay.
Go ahead.
Thanks, Manish. So I'll just keep this quick. So first, to your point, in fact, in the last 10 months, not just in India, but globally, we've actually seen a massive thrust in terms of upskilling or the online courses that individual learners and employees in our companies. In fact, if I can share an anecdote, in my professional circle in the last 10 months, 80% people have done some course or the other, either on things that they're doing right now or an interest area. We just talked about the evolution of our professionals and our e-commerce and our individual learners. I think the future looks good. There's a lot of charge that people are taking themselves. What we're seeing also is companies are actually over-indexing on it. They're doing this to make sure that their employees use this time to reskill and upsell, and giving them projects wherein they can drive business outcomes. Sharing it with Manish. Over to you.
No, I think a great point. See, overall, if you look at credit penetration in India, forget MSMEs, forget all of those, right? So if you look at the number of credit cards, we have about 2 to 3% of credit cards across India. So in a population of 100 crores plus 1.3 crores, 130 crores population.
2%.
It's only 1 to 2, maximum 3% credit card penetration. So overall access to credit is a big problem that overall India has to solve anyhow. Right? Now, how do you do it? You can wait for the credit rating agencies to come back, say, okay, this person come into the credit fold. After 2 years, he'll be credit worthy. His scores will go up 600, 700, 800, and that's when he'll get a great rate, right? The other way is to actually use alternate data. That's something that what lending cards really investing a lot behind is what are the alternate data points I could use to make sure that this person that I'm giving and trusting, right, is credit worthy without heavily relying on the credit agency scores. So I think that is going to be a pivotal point for us, because without access to credit, like you rightly said, Piers, without access to credit, the aspirations of a business can only go so far, right? And that's where I was saying it's a positive sum game, where the more access you give to an MSME with money and things like that, the more they will flourish when it comes to backing their business. The more people they will employ, then more people will get into the credit pool. But how do we break that cycle is super important.
But with regards to technologies availability, like big data, Mr. Anurag, both the Anurags I would require, inputs, because, Mr. Avulla can add inputs from the perspective of how retailers in his network, because you pointed out a young chap from Basti have done wonderful, but how did he manage to, get funds for his expansion? And Mr. Anurag Agarwal, adding the big data analytics or this thing in what Manish have added to this.
So as Manish rightly pointed out, I think there is a significant desire and need for businesses to get access to capital. I mean, be it for small supply chain, for a small grocery store guy, to somebody who wants to fund working capital for 6 months for some missionary requirements. So there is a clear and present need, and we're seeing that because on our platform we see a lot of data that comes through. We're seeing inventory data, we see revenue data of the merchants. That then obviously predicates itself that if they're doing well, and especially during this time, some merchants doing very well, they want to be able to get ready for Diwali or for New Year or for Christmas or for any of the festivals that are coming through. And there's a clear need for capital. And I think for us, it's an opportunity for us, and I think we'll take this offline, but opportunity for us to be able to work with SMEs to help support their capabilities on lending. But there is a real need for it. And I think the gap of demand and supply needs to be bridged to help SMEs in this current stage.
Absolutely.
Yeah.
And I think, Mr. Agarwal, you have some.
Yes, so Faiz, when you talk about access to finance, that's an area that we have been focused on the last 20 years, and in fact have funded a lot of companies which have been focused in that area. So I would want to just draw a parallel to the microfinance sector, right? 15 years ago, the overall size of all private sector microfinance in India was roughly about 500 crores. Today it is about 2,30,000 crores.
Absolutely.
So it has exploded. And why is it exploded? It has exploded because there was a very small innovation that happened. All of you may have heard of Grameen Bank and Professor Mohammed Yunus, right? He came up with a small innovation of replacing a physical collateral, a financial collateral, with a social collateral, and this group lending model where extremely poor women are able to vouch for each other, repayment for each other. That really allowed capital to flow and come back. Most importantly, right? Repayment track records of more than 99% on a consistent basis over the last 30 years, and that gave the confidence to lenders. And again, somebody had to take a big leap of faith, and I would credit Mr. Nachiket Moore from ICICI Bank, who really opened the taps to begin with, and then other bankers followed because the money kept coming back with much better repayment rates as compared to even the large corporate sector, right? So the quality of repayment was, so there was an established track record, and that really allowed that space to grow. Now, if you look at a segment just above that, which is the MSME sector, right? These microfinance clients are doing these micro businesses, really small ticket size, and that group lending model works there. But if you look at the segment just above that, it's not like funding is not available there. It's available through informal sources. So it comes, the funding is certainly flowing to these sectors, but it comes at a very high cost, and it comes with its own issues related to informal borrowing.
Absolutely.
How do you formalize that?
Absolutely.
I think
I think
sorry, you were saying something there.
Is it audible? Yeah. I was just, because there are some messages. I think some people have some other meetings also. Just to conclude this, I would like to share a very quick experience, and we get a lot of inputs on comments on and stories. They are not success stories, but they are stories from the SME and the MSME domain. I would just like to quote one. There is an engineering graduate who did his engineering graduation a couple of years ago, and then he joined his father's business in Delhi NCR, and that business is basically vegetable selling, vegetable retail business. And this young chap with his couple of other friends who also are engineering graduates have joined this business, and they have joined this business in the pandemic time. They invested in their digital interface. I would like to share this specifically to Mr. Kapil, that they have invested in their small technical infrastructure, technology infrastructure. They have invested in the billing software as well as the billing the POS machine. And through WhatsApp marketing or through those new tools, they have started doing good business. They have invested certain amount of money which they required from somewhere, and they got this money from the credit. Now the problem they shared is due to the some municipal drive, their business has been disrupted. Their location has been disrupted because of some reason. Having said that, they have faced a problem. But my point is, like Mr. Anurag has said, this social element, social collateral, like Mr. Bhatia has also mentioned, today we are in a scenario where collateral is not just physical collateral, and collateral could be my goodwill. And Mr. Avula must have correlate with this point that retailers are actually, their basic architecture of doing business is their social collateral. The way they have been working in a local geography and the way they'll they expand depends on their social collateral. Having said that, Mr. Kapil, do you see requirements of getting financial support for deploying any new technology which can transform the existing business, or if Tata can help that?
Actually, what we do, all our products, there is a capex element to those products. But what we've taken as a view is, if there's a capex element, we'll bear it and we'll convert it into OPEX model. I mean, obviously, customer gives a commitment to us to say that he will stay with us for a 12-month period and we absorb the capex. So we have solutions which we take on the capex and we leave it to the customer on an OPEX model, which allows the customer to, match his own cash flows, with the expenses. So to that extent, the answer is yes. And, in my mind, Faiz, you should share with me the person whom you talked about. I'm sure the problem that the person has, existing technology can solve it, because technology, if there's one thing that technology is enabled is, access to markets. It's just opened up access to markets. So it must be a peculiar case that, the example that you mentioned, I'm sure there is a solution that is available. But for us, we've always believed that, for SMBs to grow, you can't have an upfront investment that you can ask of them. It has to be cash flow based. And as I said, it has to be a flexible model which allows them to upgrade or downgrade with their demands going up or down. So our philosophy always has been to have products which are flexible, OPEX based model, because that, while the pandemic has intensified this, but the demand uncertainty always was there for SMBs. Sometimes they used to get big orders, sometimes they used to be left with smaller ones.
Absolutely. And I'm sure, Meenakshi would also have, her experience in this domain, and the advanced education market is also a lot of, lending driven market. So can you also, share some of your submissions, because more and more people joining your platform and getting, financial support, because they are they require certain financial support.
For sure, fair. So in fact, we're very cognizant about it, like as alluded earlier, even for companies and for individual learners as well. We have built a lot of partnerships with financial institutions. There are a lot of course curriculum which is available on an EMI basis. In fact, what we've also done is, for the registered users that we have on the platform, we also give them an option of viewing the courses for which applies to them. They can do their shorter module, and then we can kind of start an EMI perspective. In fact, right now, a lot of our learners find us very aligned to them because of this flexibility that we have offered to them in terms of payments. We are a big believer in upskilling, and we want to create all mechanisms to enable this evolution for all of us in the market.
Perfect. Although we started late, but I think we have concluded our discussion on time. And thank you so much, all the speakers, for making this interaction worthful for the entire SME segment. And really a pleasure, meeting all of you. And definitely looking forward to stay in touch, because this sector requires kind of holistic support. And this panel, I'm proud to say that this panel holds, this holistic solution which is actually required. Thank you so much once again.
So I just want to, tell the whole audience, I think this is the time to do big. And as you heard from all of us, I think all the enablers, be it technology, financial enabler, and government enablers are there. So I think let your imaginations flow. Think of rebooting and scaling your business. Every one of us are there to, ensure that your journey is faster and simpler. So this is the time to do big.
Okay.
I like that.
Thank you.
Thank you so much. Bye.